Hello, this is Dean Malone with Compass FX. Hope you're doing well today and again some good trades. Taking a look at the euro dollar from a larger perspective on the 4-hour chart, you can see that the euro dollar over the last 2 weeks since January the 13th has made a move of 561 pips from 26.24 on the 13th, making a move today all the way up to 31.85. 561 pip move with no major retracements. A slight retracement here into a range with a little bit of retracement, giving us a look of a potential double top, but it failed and then it pushed higher. What we're looking at in the situation here is an overbought condition in the euro dollar. That's the consensus in the marketplace. The euro dollar rarely makes a move of 560 pips without some sort of retracement in the marketplace. So what we're wanting to do as an active trader is to take an idea of what's going on in the big picture, then move down to our intraday charts and look for potential chart patterns. And today I see a rounding top pattern developing, and I want to lay out how you trade a rounding top pattern. Now, before I leave the bird's eye view of the market for my 4-hour chart, I also want to look at what's going on with my Traders Dynamic Index. What's the sentiment of the marketplace? Because remember, what we're looking at in the Synergy model is we're looking at price action and market sentiment. When they're both aligned, you have a higher favorable trade. But at the same time, what we're looking for is when they're moving in opposite direction, the divergence in the marketplace. If you notice here on this chart of the euro dollar, you can see that we've been more or less in kind of an upward channel scenario. And you can see that we've hit the top of the channel, and it's time for us to come down and test the bottom of the channel. And that bottom of the channel is going to put us somewhere near 130. Now what we're looking for is, well, does the Traders Dynamic Index, the strength, the weakness of the marketplace, the sentiment overall, where does it sit in relationship to price action? Does it correspond with price action, letting us know that we're going to keep going up, or is the Traders Dynamic Index showing us a potential retracement that's setting up? Well, if we take a look at this, first and foremost, notice where the Traders Dynamic Index is. If you think about it, the lower blue volatility band is above the 50. The market baseline, the yellow line, which normally rests near the 50, is above the 68. If you consider the current layout of the TDI, it is shifted too high. It needs to come back down. Also, if you take a look at the peaks, you can see that we have divergence. Now, we had a tighter divergence earlier. Market broke through that and went higher as of yesterday. Made this push up, broke through, but still, if I carried this over, we have a sign of bearish divergence. So in review of the big picture, we got price action making a strong move up, but yet it's hit the top of a channel, and it's time for it to come back down and test either the middle of the channel or the bottom of the channel. Bottom of the channel will put it about 130. We have bearish divergence showing in our Traders Dynamic Index. And by the way, if you haven't downloaded the Traders Dynamic Index and made it part of your trading tool set, I highly recommend you do it. You can go to www.compassfx.com/synergy and download a free copy. Thousands of traders around the world using the Traders Dynamic Index. It's a tool that I developed years ago. I couldn't find something that would show me strength, weakness, trend, and momentum all in one indicator. And frankly, what it does for me is it helps me see what market sentiment is compared to price action. And the whole idea with the Synergy model that I trade is when you have price action and market sentiment aligned, move in the same direction, you have a higher probable trade in that direction. On the flip side, when price action is going one way, but the Traders Dynamic Index is showing you another direction, generally what ends up happening is price follows market sentiment. Market sentiment is you and I. The fear and the greed, the buying, the selling pressure in the marketplace. So if this is topped out up here and looking to fall back down, eventually price is going to follow suit. So that's what the big picture is showing. I'm going to move down to my intraday chart on my 30-minute, and let's discuss in more detail how to trade a rounding top pattern. What does it look like? How do we define it? Where's our entry point? Where are our stops? And where are our targets? Let's cover all those bases. So taking a look at the TDI on a 30-minute, look at this. Way up high, breaking to the downside. How you note a rounding top pattern, which is to be traded in an overbought condition, is you look for highs. I have a high here, a little bit higher high, another high, bit higher, and now we start having lower highs. And if you notice, this kind of has this rounding effect. If I could draw it on the chart, it has a kind of a rounding effect. Now, how do we trade this? Well, first and foremost, look back in time and connect your previous lows. So at this point, I'll go back here. We have a low point here, a low here, and we have a low right there. So I'll draw a trend line. One of the easiest ways to trade is the break of a trend line for a particular direction you want to trade. So in this case, we break right up in here. Now, today in my active trade room, I had an order up in this area, and I still do. I'm looking for the market to turn over and fall. Where to? Well, there's a couple of places we want to look at. Now, some would suggest that what you do is look at the pattern as a whole and wait for an entry on a break of a previous average low, which is right in this area, right about where we're at right now. So that's why the market's kind of bouncing around right here near 31, because that's the rounded top. Do we get follow through? Where are our targets to look for? And where do we put a stop? If I've already traded the trend line break to the downside here, I put my stop about half the distance from top to bottom. So if I draw a little trend line here from top to bottom, and I measure that, I just simply measure that distance, that's about 85 pips right there. So somewhere right in this area, you can come in here and you can put your stop somewhere right there. Okay, we're already into some, or you just have a trailing stop. Okay, now at this point we've already gotten into the trade. It's making a move on down. Where to now? So this up here is our stop. We already got in up here. This is one of the targets right here. This is target number 1. Just completing the rounded top back to where we started. But we're not done yet. What we're going to start looking for is a continuation of this overall pattern. Notice that this overall pattern, high, high, another high, high. You see, this too could develop into a bigger rounding top. So there's the potential for us to continue making a push on down. Now, what most professional traders will look at is what's referred to as a measured move, and we'll come in here, we'll double click on the distance from the top to the low point here, our first target. We will take this and then we'll look at the distance on down from the break here. We'll look for it to potentially get somewhere in this area. Now the key to this is not to think it's just going to go right to the low point right there, but let's look back in time and see where has price been before that the market could bounce off of. Well, if you look back in time, with this little range right back in here, draw that range right there. So as the market comes down, I'm going to look at, there's a possibility of a matchup here where we have a bottom of a range and our measure move to the downside. So target 1 right here, target 2 right there, and let's step out one more time and let's draw another trend line from a previous low point coming across this low point here. This, as it moves down, somewhere along this trend line right here, depending upon how long it takes to get to, from a break here, that would be, somewhere on this trend line would be target number 3. So this is how to trade a rounding top. First and foremost, go look at your larger picture. Look to see that you're in an overbought condition and that the oscillator, be it the Trader's Dynamic Index, or if you're using a MACD, a stochastic, an RSI, whatever it might be, look for bearish divergence. Look for the breakdown. As we saw here in the 4-hour chart, it's starting to turn and break to the downside. In your intraday chart, it's already breaking down. We're already starting to get this move to the downside in our intraday chart. So now we start following it through. Our entry point can be on the break, and make sure it's a true break. Sometimes you get a quick break but doesn't close below and retest. Sometimes what you have to wait for is the break up here. Look for it to go back, attempt to do a retest, and then continuation. So as it's making its move down, you can put your stop about the halfway mark between the top to the bottom of the initial rounding top here. Now what we're looking to do is to continue to trade the pattern on a larger scale rounding top here. Take the measurement from top to the bottom of the initial, move it down. There's target number 2, as long as it matches back here. So there is the possibility that our second target may be in this area right here. Once we break through that, our next target is the next trend line based upon previous lows and drawing a trend line along those previous lows. Well, folks, it's Dean Malone with Compass FX. Hope some of the information I've shared with you about identifying and trading a rounding top pattern will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.